And just like that, we are back. If you could please grab your phone and call your favorite Palmer Bear and tell him we're back. We're going higher. Nvidia reported earnings, great earnings. The AI party is officially still here. All-time high soon, boys. All-time highs. Let's talk about it. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks moved lower on Wednesday as investors cautiously counted down to Nvidia's earnings report, seen as a crucial test of hopes for big tech and tariff uncertainty. And guys, what we saw today was just a broad-based sell-off coming off yesterday's S&P 500 plus 2% day. So very solid day. And what we really saw was just a bit of digestion of yesterday's broad-based trade. There were a couple of winners here. You could see United Health was up 1%. GE was ever so slightly here in the green along with GEV. Then we had AVGO, Broadcom was up 1.6%. Meta was up 0.23%. Apple was kind of flat here today, and everything else was actually kind of red. There was no real winner. Every single sector fell except one major sector, that was the XLC, and even then it was pretty much flat on the day. In second place was real estate, falling 0.01%, but pretty much these two sectors outperformed by just being flat on the day. Gold also fell, but it was the third best, I guess you could say, index, falling 0.22%, and then every other sector fell in excess of like a half a percentage point, with selling led by the utilities, energy, as well as the material space, and the S&P 500 falling 0.56%. So look, in aggregate, a pretty ugly day, but if we count yesterday and today net, you're still up in a very big way, and things still looking largely bullish for the S&P 500. We saw selling across the board, mid cap, large cap, small cap. We saw excess selling here in small cap value, but some mild outperformance, in mid cap growth, as well as large cap core. But all in all, it was just a day where we just saw a bit of profit taking, a bit of digestion. And I think that today's trade was largely healthy in the grand scheme of things, as well as coming off yesterday's trade. Now, what did dampen sentiment today was the FOMC minutes. Now, minutes from the Federal Reserve's May meeting, released today, revealed officials are growing concerned that Trump's tariff policy could change both the maximum employment and stable price mandates for the central bank. Participants noted that the FOMC might face difficult trade-offs if inflation proves to be more persistent while the outlook for growth and employment weakens. Participants agreed that the uncertainty about the economic outlook had increased further, making it appropriate to take a cautious approach until the net economic effects of the array of changes to government policy become clearer. So, in other words, the Fed are going to remain cautious as the tariff fog begins to unveil, and they're still looking out for their benchmarks, their mandate, stable prices and max employment. Now, what also dampened sentiment today was Donald Trump, in the last hour of trade, came out and ordered US chip designers to stop selling to China. I don't know what this order looks like. I think we're going to get more information as the week goes on, but this is Trump's latest effort to stop China's technological advance. He believes the best way to get ahead is to not get these chips in the hands of Chinese firms. What did help sentiment today was that US officials are officially heading off to New Delhi in India for last lap trade deal talks as India tries to dodge Trump's tariffs. I think we're going to get a very good trade deal. We're probably going to get that announcement on the weekend, and that could give us a little bit of fuel to kick next week off, similar to what we saw today. So be prepared for an India trade deal that could really move the market, especially if it comes in above the analysts' expectations. Now, looking at some market movers here today in terms of earnings, very, very crazy day for earnings. Abercrombie Fitch up 14% today. Now, this was absolutely crazy because they beat on revenue, beat on EPS, lowered their guidance, right? And the stock was up 14%. And my opinion on this is that I think the market was expecting guidance to be pulled for something like Abercrombie. And when they actually released the guidance, the stock's going to rip 14% on that. By the way, the stock is still really, really cheap, trading at 8 times earnings, right? And a price to sales ratio of less than 1. So look, if you think the stock can't go any higher, it's looking mighty cheap, all things considered. Now, Salesforce, one of the big tech names that reported today, dropped their earnings. Now, they were up 5% here in the after hours. Guys, they had 17 earnings beats except for this one section here in Q3 2025. So this company is known for this beating earnings. That's exactly what Salesforce did. They beat on the top line, beat on the bottom line, raised guidance ever so slightly. Very, very solid earnings from Benioff and their team. Now, the big one, the one all of you are waiting for, is Nvidia. Now, Nvidia reported a beat on the top line, a beat on the bottom line, They grew revenue 78% on a year-over-year basis, 12% sequentially on a quarter-over-quarter basis. Guidance came roughly in line, a mild raise on some estimates, but what really set the market on fire was Jensen Huang coming out and noting that demand for Blackwell is amazing as reasoning AI adds another scaling law. I think that is why you're seeing the stock up to, at some point, nearly 3% here on the day. And truth be told, the AI trade continues, and we're going to cover both Salesforce and Nvidia on the second channel, FinFluential Media. So go ahead, like and subscribe, and you're going to see the full in-depth deep dive to Salesforce and Nvidia's earnings. It's going to be released a couple of hours after this video. And then for everything we saw today, there was 2,600 advances, 4,200 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, leading the S&P 500 to 4.56%. And then what we saw is that market momentum continues to do what it's done for the last week or so, right? We're seeing pretty bullish momentum in the 5-day, 20-day, and 50-day moving average, but we can't seem to take the 100-day, 150, and 200-day. Maybe after Nvidia's earnings, we'll be able to go ahead and retake these highs right now. But it seems that we are finding resistance with the 100-day moving average right here because we're simply not able to take it. You know, this has been the case for the last couple of weeks, in fact. So if we want the next leg higher in the markets, we need to go ahead and retake the 100-day moving average in the majority of S&P 500 stocks. If we get that, Bob's your uncle. Now guys, looking at the charts, you can see on the day here, everything was pretty red from the S&P 500, the Nasdaq 100, the IWM, the RSP, mid caps, small caps, all across the board. But we are seeing some positive price momentum here in the after hours. The IWM is flat, the RSP is flat, but the Q is up 0.62%, the SPY up 0.33%. And this mostly has to do with the earnings of Salesforce and Nvidia. Nvidia up 4% in the after hours, Salesforce up 1.35%. So coming off its highs here on Salesforce, Nvidia sitting at its high. So the market definitely liking these earnings. This is price acceptance at this 134 level, and I think we should see Nvidia probably move to all-time highs on the back of these earnings. To be honest, it was a flawless earnings report. It's just what we've come to expect from Nvidia at the moment. But looking at things more granularly, we saw growth outperform value on the day, but still both were down, but growth up 0.7% here in the after hours. Very, very interesting. Europe fell, Chinese stock fell in a significant way, and that probably had to do with some of the conversations and that executive order, China feeling the burn a little bit there. And I think that also has to do with PDD's earnings yesterday. You know, PDD was down 13% on the day. It was down another 14% here today, guys. And we did see volatility tick up, but you know, anything below the 20 mark is still considered relatively mild volatility, especially here in the spot VIX. Yields did tick up ever so slightly, but nothing significant. You know, we're still at this 4.4% range for the 10-year yield. Again, it does look like we're having some price acceptance. And then we saw the dollar gain ever so slightly. Bonds fell as a result. Bitcoin, it was down 0.53%. That's actually what we expected. We said we're looking for a little bit of volatility in Bitcoin for the next 2 weeks before making the next leg higher. And then gold fell 0.64%. Silver was down. We did see WTI outperform ever so slightly, but that was pretty much it. Let's talk about the S&P 500. So guys, you know, last week we said that you want to do a couple of things. You want to wait for the weekend, right? See what happens with trade deals and then get in if we get favorable news. And that's actually what we did right here. You know, we got favorable news and the markets ripped to the upside. However, something to note is that the core wall actually didn't move up. It's been at this level for a good number of weeks now. So the 59.60 level is proving strong resistance. If we go ahead and break this and above in tomorrow straight after the Nvidia earnings, then we could probably see a sustained move higher. However, continue to expect this to be a strong resistance zone until this actually moves up to a higher place. That being said, it does look like we are putting in a higher low right here. And if we do retrace back to this level, I think 57.80 is probably a good buy zone for the S&P 500. Very similar situation in the Nasdaq 100, but I probably would go as low as the 20,580 level, and maybe you could say the 20,800 level, somewhere around there. If we do pull back, this is a good zone, but it does look like that these core walls are probably going to move up tomorrow, especially if, you know, we do see follow through from Nvidia's earnings, Salesforce earnings, and probably all of the other mega caps and all of the other semi names on the back of these earnings. Nvidia just proved to the world the AI trade is still there. Demand is not slowing down. And it does look like Nvidia is now shaping up to be a second half of this year's story, especially if we go ahead and hit those all-time highs. So guys, you definitely don't want to be short here. You definitely do want to be long equities, long risk, especially after those Nvidia's earnings. Nvidia just gave us a green light to rally for the next quarter. So too did CRM. And I think that's going to continue. I mean, if these mega caps rally, the markets as a whole will follow suit. What's not going to follow suit though is the RTY. Not looking that great at the moment. It does look like we're putting in a lower high. Still, if we do get a pullback here, to this 20,013 level, I would be a strong buyer because you're still, 20-25% off the all-time highs, aiming for these 52-week highs as well. That being said, yeah, look, market momentum not looking that great in the IWM right now. I think if you are looking to get into maybe some more broad exposure, maybe look to the RSP. This looks like a far stronger index in my opinion, especially with this higher low right here and just the move we've seen off the lows, relatively speaking. If you are thinking of getting into the Russell 2000, maybe look at the RSP instead. There might be a little bit more value in that name. But guys, it's very, very obvious. I think we are going to go higher, especially after these Nvidia earnings, strong earnings, tech back in focus. And yeah, I think the next 3 months, barring any news from Donald Trump, we probably go higher. And I think what's going to follow suit is Bitcoin as well. We've been bullish on Bitcoin. We said to buy here and the trend will continue. However, do expect some volatility here in the next couple of weeks, guys. We may go up, we may go down, but do expect some volatility, a bit of price digestion after what has been a very, very strong move off the lows, peak to trough. We're looking at a 40% move. Completely normal to just expect a little bit of digestion in Bitcoin, and then we'll make the next move higher. That being said, great place to start selling puts, to start accumulating Bitcoin. The path of least resistance continues to be to the upside. Now let's actually go ahead, quickly have a look at gold. Gold hasn't acted too well here in the last couple of days. It does look like this is officially going to be another lower high. So we put in a high, lower high, another lower high, right? In the context of putting a low right here and then a lower low, we thought this was going to be a move to the upside, but we couldn't retake this high right here after this strong move. So that means now that we're on a daily downtrend, we're going to obviously target the 31 38 area, and then from there we either find support, make our next move up, or we go to the downside from there. But yeah, this price action we're seeing in gold right now, not looking constructive. You don't want to be in gold, you want to be in assets that have strength. Those assets are stuff like Bitcoin, in my opinion, very, very strong, especially hitting those all-time highs. Gold unable to retake those all-time highs, putting in lows, definitely not what you want to see in gold. Don't get me wrong, the trend has been very, very strong, but what we're seeing up here is a little bit of exhaustion. So do expect that to occur, especially as we do see, risk assets continue to move up, stuff like the S&P 500, Nasdaq 100, stuff like Nvidia now up 5% here in the after hours. Let's quickly have a look at the 10-year yield at the 4.4% mark, guys. This 4.8% mark, that is where things get a little bit scary for yields. We're a while off there. We are pulling back from these highs ever so slightly, but I want to see a bit more of a pullback. That being said, it does look like the only thing yields have done for the last couple of years is probably just trade inside this massive, massive range. That's all we've really done for, since 2023, probably early or late 2022 after the massive move up here in yields. Again, if you were to put technical analysis on this, you'd say, we're sort of just digesting everything we see right here. You'd say traders are selling the top, buying the bottom, and you don't really know where it's going to go unless you have a decisive break to the upside or the downside. Looking at the dollar, I continue to remain somewhat bullish on the dollar. I said that I think we probably are going to go to the 104 area. I think I said, we're looking for a little bit of a pullback and we'll find support, at these lows. That's exactly what's happening right now. And we are seeing a little bit of strength in the dollar. Do expect us to go ahead, probably reach that 101 area, maybe as high as the 104 area as the week and months go on. And let's quickly look at the Nvidia chart. We're going to do a full breakdown. So if I should just go right here, hit labels, and we go pre-post market labels. So Nvidia is now trading at the 144 area. You can see we sort of had like a digestion zone right here after this massive move up. We've broken above. I say the next target here for Nvidia is probably going to be the 149, 152. In fact, just all-time highs. The next target is all-time highs for Nvidia. What an absolute buying opportunity here at the $88 Nvidia was. Look, still sort of trading in the sideways range for, since, May 2024, for the better part of the last year or so. We've had a lot of digestion after this massive, massive move up here. this 500% gain in Nvidia. It's sort of seen a digestion in this, but it does look like we are going to go ahead, hit these all-time highs, and the AI party continues for Nvidia. If you're not long already, I did say on multiple occasions, Nvidia was a buy, not at the $88 level, but when we broke above the 100 level, I said Nvidia was a strong buy, looking for those all-time highs, and it looks like we probably are going to get it in the next couple of weeks. And diving into sentiment, guys, this is CNN's Fear and Greed Index, and we continue to remain in this greed zone after the momentum we saw yesterday and some of the price action we got today. We're still in this greed zone. It's going to take a lot for us to get into this neutral camp, but it's also going to take a lot for us to get into this extreme greed zone. And this isn't really the place where you want to be actually buying stock, guys. You really just want to be holding and let the market do its thing. The best place to buy was when we were here in extreme fear, in the fear zone. Now, as an investor, best thing that you can do now is absolutely nothing. Because when we do look at the fundamentals, when we look at the earnings this quarter, things are so far looking very, very good. 14% earnings growth. The majority of companies have reported earnings. This isn't going to change now that Nvidia has reported earnings. And if you exclude energy, they're looking at 16% earnings growth, 5% on the revenue side. Healthcare, con services, and tech seeing double-digit growth. But there is a couple of outliers here we do need to be aware of. Materials, consumer staples, real estate, and energy all saw earnings decline. However, only one of these sectors, the material sector, actually saw negative revenue. So, top line growth, sales growth for these three sectors was still largely good. Everything looking robust, margins coming in line. This quarter's earnings looking very, very good. However, we are beginning to see weakness in the economic data as it pertains to corporate earnings and their expectations deteriorating. We can see here that since Liberation Day, the earnings revisions ratio has been pointing down. And the second we get below this line right here, it's telling us that we're seeing more negative revisions than positive revisions. Now, if this does take a turn to the upside, that is a good thing. But if we keep following this trend, it's very likely that we are going to see a weak second quarter and third quarter, unlike the first quarter we just saw. And if you guys are looking to diversify your portfolio, maybe it's best to start looking at European stocks. JP Morgan's projection for stock 600 versus the S&P 500 is for 25 basis points. In other words, the stocks 600 or European stocks are set to outperform the S&P 500 counterparts. You can see that most of the time the S&P 500 has outperformed, particularly here in the last 10 years as it pertains to each particular year. But JP Morgan see massive outperformance to come from European stocks. Now, let's actually talk about the macro, because if the macro deteriorates, that is how Europe is going to outperform the US. And I'm speaking about the US macro right here. Q2 Atlanta Fed's GDP now still sitting at 2.3%. That's very robust. Consumer confidence yesterday was released. We saw a massive uptick, outperforming the benchmark, and this could be the start of a trend to the upside. Nonetheless, while confidence did come in better than expected, we are still at very low levels, relatively speaking, and some of the lowest levels, excluding the dip we saw recently, going back to as far as like 2022 and 2020, the COVID situation right here. So we want to see continued confidence moving to the upside. If we do get that, that's very positive. Now, something we look at this channel a lot is federal employment tax receipts. We look at it every week, once a week, sometimes twice a week. And we could see right here that for the month of May, now May's not done, but this is pretty much what we're going to report. We're going to see a 5% growth relative to the same quarter last year. Now, something to note, the first week of May and the last week of April was actually very, very weak, but we saw massive strength towards the end of May to print this number right here. So if we are expecting to see labor market weakness, we're not seeing it right now, at least not in the data. And on average for the last 12 months, we're looking at about 6% growth in federal employment tax receipts. And that simply means that employers have seen high compensation, and that often results in higher disposable income, especially because when you look at the rate of inflation, PCE is sitting at about 2.3%. Real income, is very close to like that 3.7% mark. Very, very strong. I think anything above 2.5% is super strong, and it is positive. You love to see that. Looking at data for the rest of the week, we had the FOMC minutes today. Tomorrow, we are going to get the GDP growth rate quarter over quarter. This is the first quarter. It's the revision. and the expectation there is for negative 0.3%. If we come in at negative 0.2, that's going to be very, very positive. I think the market will take a leg up on the back of that news. Earnings for the rest of the week, we've had the major players, Nvidia, Salesforce, report. For the rest of the week, some of the big names include Foot Locker, Best Buy, RBC Bank right there, Fruit True Holdings. That's really it. And then after the close, we have Costco and Dell, as well as Marvell, Ulta Beauty, Zscaler, UiPath as well. So they're all reporting tomorrow. But again, the big one here is going to be Costco and Dell. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.